Hi there, welcome to Kneppy Invest. In this June Quarter Appendix 4C video, I'll be talking about a company called ArchTIS. This is a fairly popular company for viewers of this channel because it did make it into my group portfolio. Maybe I should say our group portfolio. And since I am doing this video, we already know this company is operational cash flow positive or was operational cash flow positive for the June quarter. So let's get stuck into it and look at some facts in regards to ArchTIS. ArchTIS was established in 2006, and this is a security company that specializes in the design and development of products, solutions, and services for secure information sharing and collaboration, to code AR9. And even though they've been around for about 15 years, it's only been the last year and a half where this company has really taken off. Market cap $82 million, and receipts for the financial year 21, which we do see in the June quarter results, just under $7 million. And for the financial year 21, ArchTIS was operational cash flow positive by $500,000. And when you look at the price of sales, only 11.7 right now, so not too expensive for this type of company, particularly because they are growing quite quickly over the past year and a half. If you do want further information on this company, I highly recommend going to their own website. Trove of information there. If you don't have access to their website for some odd reason, you can always go to one of the presentations the company has released, or just go to the Appendix 4C that they released on the 27th of July. Before we delve deep into the June quarter results for ArchTIS, just want to go back to the March quarter to see how the company was moving at that point in time, and then just see how they've progressed over the next 3 months as we look at the June quarter. Receipts and customers, $1.5 million for the March quarter. And if you know anything about me, you'll know looking at one quarter's cash receipts in isolation tells us nothing. I like to look at a trend, and we'll look at the trend in 2 slides' time. But more importantly, I like to focus on the cash flow, whether the company is operational cash flow negative or positive. And in the March quarter, ArchTIS was operational cash flow negative by $707,000. The other thing I like to look at is the amount of cash the company has. And for ArchTIS, that is not an issue. By the end of the March quarter, they had $12 million. And with when a company has a market of about $80 million with cash of $12 million, that actually is a big tick in my books. It also means the company's management have a lot of flexibility in how they deal with that amount of cash on hand, whether they go down the route of acquisitions or they spend a lot of money in research and development for organic growth in the future. It's all up to them. I just like that amount of cash because it gives management flexibility for growth initiatives in the future. And that's got to be beneficial for the company and the shareholders over the next, we'll say, 3 to 5 years, potentially anyway. As we look at the June quarter results for ArchTIS, there are some very significant things going really well for this company, and some things that really stand out. Receipts and customers have more than doubled from the March quarter, increasing from 1.5 million to 3.2 million. But the most important thing to take away from the June quarter results for ArchTIS is the coinciding lack of increase in costs. And that means that increase in receipts from customers, which was about 1.7 million, has almost all gone down to the bottom line. So just have a look at some of the lack of increase in costs in some of their payments. For instance, product manufacturing and operating costs actually fell during the last 3 months from $209,000 to $178,000. They've spent a little bit more money on advertising and marketing by only $70,000. Staff costs haven't increased at all, stayed around about 1.4 million. The only thing they really increased their spending on was in administration and corporate costs. That increased by 300,000. But overall, they haven't spent more money on a lot of these costs. And that means that $1.7 million of increase in receipts has all gone down, or mostly gone down to the bottom line. In fact, they've increased the operational cash flow from negative 700,000 to positive 742,000. That's a change of about 1.5 million. So you can just see the increase in receipts is about 1.7 million. The increase in the operational cash flow is about 1.5 million. So this company has achieved some operating leverage, which means the increase in receipts has all gone down to the bottom line. And that's completely positive for this company. The other thing is, because this company is not spending a lot of money in financing and investing activities, so no money on acquisitions, that sort of thing, all that money just means, all that increasing operational cash flow just means the amount of money this company has by the end of the quarter has grown by the operational cash flow. It's gone up from 12 million to 12.8 million. I've already mentioned that looking at receipts for one quarter in isolation really tells us nothing. We need to know the trend in receipts through time. Are receipts going up or are they contracting? That tells us if a company is growing and has a potential to grow in the future. And when we look at ArchTIS's receipts history going back to the September quarter 2018, initially we do see no growth in the receipts until 1 year ago. So really between the September quarter and the December quarter 2020, that's when we started to see receipts growing with ArchTIS. So we've had 4 quarters of growth, and it's grown from 230,000 to 3.2 million. So receipts have really taken off for this company. In fact, they're growing at 103% per quarter over the past 4 quarters. And if you go back all the way to the September quarter 2018, they're still growing at 14% per quarter. And that's because the first 8 or 9 quarters here, there was no growth at all. So it does look quite positive for ArchTIS based off the last 4 quarters. And the question is, can they continue this momentum moving forward? And with a market cap of only $80 million, and they are operational cash flow positive and growing at a considerable rate, there could be some good value with this company right now. As we look at the daily chart for ArchTIS going back to June 2020, there are a few things that really stand out to me when I look at ArchTIS's share price performance. And the first thing that I really notice is the importance of sentiment on driving the share price higher and lower. And ArchTIS's share price has definitely been affected by sentiment. If we go back to June last year, the share price of ArchTIS was around 5 cents. And then over the next 2 months, the share price rose from 5 cents to a high of 60 cents in August. And what drove the share price higher during that 2-month period was a lot of positive sentiment driven by the story that security companies will be benefiting from the increase in spending by the government in that sector. And it drove the share price to 60 cents, a 12-fold increase, all driven by positive sentiment. And there was that story there. However, sometimes that story can run out of steam, and it ran out of steam in August, September of 2020. And that's why the share price drifted lower from that 60 cents to 22 cents in June, July of this year. And you can see also the volume starting to decrease during that period. So people weren't that interested in the story anymore. But the one thing that shifted or changed for this company in July, August this year, and why the share price has started to turn upwards, the trend has become positive. There's a shift in sentiment from negative to positive, is the financial news or the financial state of this company. They released an Appendix 4C that was operational cash flow positive. And I prefer a shift in sentiment of a company from negative to positive to be centered around good financial news compared to story that we saw in June, August last year. Because when you do see share price increasing 12-fold because of the story, it's not sustainable for the long term. But when you see the share price starting to increase because of good financial news, that is potentially sustainable in the long term, particularly if the company can continue that positive financial news over the next few years, which ArchTIS can do, in my opinion. I hope you like this video series on June Quarter Appendix 4C for companies that have achieved an operational cash flow positive quarter. If you do like this video series, have a look out for the next 4 videos I'll be doing, which will be on Alcidion, SomnoMed, Raise, and Beam Communications, all 4 companies achieved an operational cash flow positive June quarter. That's all I have for this June Quarter Appendix 4C video for ArchTIS. If you think I've left something out or you want to talk about your own opinions and thoughts about this company, feel free to leave anything in the comment section of this video. I'd love to hear your opinions and your thoughts, particularly if they are different than my own, because that's how I grow as an investor. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.